Why do you think it's always the case that the moment you have entered any stock after your detailed analysis, and then suddenly when you enter, you realize that market has reversed and there's nothing that you can't do? Why is that you are afraid to enter the same stock that you have actually been stopped out, and then you continue the rally? Now we'll come to the example. Let's look at the example. Now this is a stock which is a perfect. If you look into, if you understand Bollinger Bands, if you understand breakout, volume breakout, if you understand the volatility contraction pattern, that basically your stock remains in a one range for a longer time, and then suddenly one day it breaks out. And this is what the pattern actually has been advocated most of number of time by all the experts, including me. But why does it happen that the moment this breaks out, you enter, and then you might have decided your stop loss. Let's say this was your entry stop loss, and then it goes up before you could even think of taking a profit. It again sharply comes down, and then you're forced to exit. Actually, it's very normal. This is what you're supposed to follow a rule. You are supposed to define your exit before you enter, and then you're supposed to exit the moment it hits your stop loss. This is not some kind of a sin that you're committing. We have been told that the moment stop loss is done, we it is was a proper wrong trade and wrong analysis, and we want to move to something new. This is nothing new. This has been told to you by almost everyone. But what someone doesn't tell you is the fact that the moment it takes your stop loss, and it is supposedly it's going to reverse back the way it does, what is actually stopping you to enter from here? Why you can't think of the fact that because you took your stop loss, it made you exit, it saved you probably a further pain that might have caused. But now, because it rejected your particular stop loss and it didn't allow you to continue to the trade, there's a high chance that you can actually think of entering the trade and maybe earning the more than you could have lost. Now look into the example. If you would have actually exited the trade of Loda around 1100 after entering around, let's say, 1130, you would have only lost technically 30 rupees. Okay. But moment it crossed your last given high from where it came down, and you could have actually thought of entering this trade again. Why? Because everything remains the same. There's a breakout which happened. Breakout has sustained. It is about the Bollinger Band. There are good volumes. The volumes continue to grow. There are more green candles than the red candles overall. So why didn't you enter this particular trade again? If you had entered with the same method of having a stop loss, you would have actually gained more than what you have lost, and you might have been actually able to continue this rally. So psychologically speaking, if you have a risk and you exit, there is nothing wrong with that, but you should be prepared to continue with the trade if it is offering you again. You should not be afraid to not enter the trade just because you had a bad experience. This is the reason why number of time you are actually into the right trade, you get exited because of stop loss, but you cannot enter again. Why? Because you have a fear that you will not be able to define the risk. Actually, it's very easy. The moment you see the high is crossing, you have to go with the same method of having your risk defined at the entry. And this time, if it has a real strength, the stock has a real strength, it is not going to hit your stop loss again. If it does twice, then you are actually right about your trade. You should not even try for the third time. But actually, you should try for the second time. And more often than not, you will see that the second time that a trade that you tried had actually made you, good money than you would have actually made for the first time. Understand this method, keep in the mind about this particular psychology of the market, and then you will see a number of trades where you have actually missed out in the past are reducing day by day.